Hello students, greetings of the day. St. Joseph's College for Women Autonomous Vishakhapatnam welcomes to St. Joseph's open web-based learning platform. So e-learn for a soulful and enriching e-learning experience. Department of Commerce and Management of St. Joseph's College for Women Autonomous presents SMOOC, St. Joseph's Massive Open Online Course. I am R. Pavani, Assistant Professor, Department of Commerce and Management of St. Joseph's College for Women Autonomous Vishakhapatnam. Would like to teach you third module, Accounting Principles in Introduction of Commerce. So students, now you are going to learn accounting standards in the module of Accounting Principles. The outcome of this chapter are students will demonstrate knowledge of preparation of financial statements and or financial schedules in accordance with generally accepted accounting principles through analysis and synthesis of information as well. The contents of this module is accounting standards and its purpose, the list of accounting standards. So students, now you are going to learn what is meant by accounting standards. Accounting standards are a set of rules and principles that guides and preparation and presentation of financial statements. These financial statements are either profit and loss account, balance sheet, or cash flow statements. They ensure transparency, comparability, and reliability of financial information. These accounting standards are issued by the government bodies, regulatory bodies, and they provide framework for how transactions and events should be recorded, measured, and disclosed. The purpose of accounting standards are to promote the dissemination of timely and useful financial information to users. These users, internal users or external users. Internal users are those users which are in the business like managers, external users like creditors, government, investors. Examples of accounting standards are as follows. International Financial Report Standards IFRS, which are globally accepted set of accounting standards issued by the International Accounting Standards Board. The another one is Indian Accounting Standards harmonized with IFRS. These Indian standards will be issued by Indian Accounting Standard Board and used by Indian companies. Generally accepted accounting principles known as GAAP, the set of accounting principles and procedures used in the United States. So students, now we will see the list of accounting standards. The first accounting standard is disclosure of accounting policies. According to this standard, every organization is required clear disclosure of all significant accounting policies used in the financials. The second accounting standard is valuation of inventories. As per this standard, every organization guides in valuation of inventory, either cost value or the net realizable value, whichever is lower, that should be shown in the books of accounts. Third accounting standard is cash flow statements. According to this standard, every organization requires the cash flow should be classified into operating activities, investing activities, and financing activities. AS4 is contingencies and events occurring after the balance sheet date. According to this standard, every organization has to reveal the treatment of events after the balance sheet date and disclosure of contingencies. AS5 is net profit or loss for the period, prior period times, and changes in accounting policies. According to this standard, every organization have to show how to treat prior period items and policy changes. Accounting standard 6 is depreciation accounting, which is withdrawn and merged in accounting standard 10. Accounting standard 7 is construction contracts. According to this standard, every organization have to show how the revenue and cost recognition for the long-term construction contracts. Accounting standard 8 is research and development costs, which is withdrawn and merged in accounting standard 26. AS 9 is revenue recognition. According to this standard, every organization has to show when and how to recognize revenue from sales, services, interest, etc. Accounting standard 10 is property, plant and equipment. According to this standard, every organization have to show how they are doing accounting for fixed assets, either the fixed assets acquisition and calculation of depreciation and disposal of asset. Now, accounting standard 11 is the effects of changes in foreign exchange rates. According to this standard, every organization have to reveal the treatment of foreign currency transactions and translation of financials. Accounting standard 12 is government grants. According to this standard, every organization have to reveal how they are doing accounting for grants or subsidies received from the government. AS 13 is accounting for investments. According to this standard, every organization have to reveal that how they will value and disclose the current and long-term investments. Accounting standard 14 is amalgamations. It will deals with the accounting for mergers and acquisitions. Accounting standard 15 is employee benefits. Like every organization have to show that how much employee benefits they are giving to the employees, like gratuity, pensions, leave encashments, etc. Accounting standard 16 is borrowing cash. When you are capitalizing interest on loans, then what are the borrowing costs that they have to show. Accounting standard 17 is segment reporting. Every organization have to show the reporting of financial info by business or geographical segments. Accounting standard 18 is related party disclosures. So every party disclosure of transactions which are related to subsidiaries or directories that should be disclosed. Accounting standard 19 is leases. So according to this standard, every organization have to reveal the classification and accounting for finance and operating leases. Accounting standard 20 is EPS, that is earning per share. How the share calculation will be calculated in the company, that should be revealed according to this standard, that is formula and disclosure of basic and diluted EPS. So accounting standard 21 is consolidated financial statements. According to this standard, every organization have to reveal that how they will prepare the accounts. It might be a parent company accounts or a subsidiary company accounts or both accounts. Accounting standard 22 is accounting for taxes on income. What are the timing differences between accounting income and taxable income, that should be revealed according to this standard. Accounting standard 23, accounting for investments in associates. According to this, every organization have to show the equity method of accounting for associates in consolidated statements. Accounting standard 24 is discontinuing operation. Every business organization have to disclosure and accounting of business segments which have been discontinued. Accounting standard 25 is interim financial reporting. According to this standard, every organization have to prepare the guidelines for quarterly or interim reports. Accounting standard 26 is for intangible assets. Every organization have to reveal how they are recognition and amortization of assets like patents, trademarks, copyrights or any other softwares, etc. Accounting standard 27 is financial reporting of interests in joint ventures. Organizations have to reveal how to account for joint ventures and joint control. Accounting standard 29 is impairment of assets. According to this standard, organization have to reveal, test and account for reduction in value of assets. Accounting standard 29 is provisions, contingent liabilities and contingent assets. According to this, the organization have to show when to create provisions and how to disclose the uncertainties. Now students, check your progress. Accounting standards are a set of guidelines, rules, and procedures that businesses follow when preparing and presenting their financial statements. Now, the activity for you is take any business organization and then find out how many accounting standards they are following. Thank you, students. Happy learning.